Thank you very much for staying on. Welcome back to the marketplace. Now, government could be coming under serious criticism from some corporate governance experts. This follows the nomination of banker Dr. Kofi Mensah by President Akufo-Addo as the new managing director of the ADB. Some industry persons Joy Business spoke with have questioned the approach in nominating the new boards, especially when ADB is a listed entity. George Biafe tells us more.
Companies Act, shareholders of a company nominates their board, and the board in turn names the managing director of that firm. That is, if it has not been stated in the company's own regulations. For some of these corporate governance experts, it's inappropriate for government to nominate DMD for ADB, looking at the bank's current status. And there are even fears that the actions could impact negatively on ADB's share price. Joy Business is learning that the current managing director of ADB, Daniel Asiedu, has not been formally informed about this move. Some industry persons are also criticizing government's actions, especially when the old board appointed by the previous administration is set to have its final board meeting this Wednesday, which government could have used this opportunity to communicate its intention to nominate a new MD for the bank. Following ADB's move to go public and list on the Ghana Stock Exchange, government lost its majority stake to investment firm Belstar, which now owns 34% interest in ADB, compared to government's holdings of 32%. This now makes it difficult for the state to nominate all the board members and even appoint an MD, which has been the practice in the past. At an extraordinary meeting last month called by its new owners, Belstar, shareholders approved some changes to the company's regulations. Key among them was to restrict the appointment of an MD for ADB to the board. Persons close to government are insisting this move should be treated as an internal communication to the finance minister for the necessary consideration and not an outright appointment. Sources say the Minister of Finance could even advise the president that under the current laws, it might be difficult to nominate an MD for ADB. Persons close to the presidency are also not ruling out some gentleman's agreement with the major shareholder of ADB, that is Belstar, on the nomination of the new MD for the bank.
All right, so it's quite a controversial development, and we'll bring you an expert analysis on this particular move and its implications on the stock market very soon. Now, moving on, the National Council of the Association of Rural Banks is asking government to immediately review the 25% corporate tax on its members. The council says the effect of this would not be felt only in their inability to offer more employment, but also result in a drastic cut in their corporate taxes, corporate social responsibilities. Initially, rural banks were paying 8% corporate tax to government, but this has been increased to 25% by the previous government. The representative on the National Council of Association of Rural Banks, Safo Kantanka Stephen, says this is too much for them.
Initially, we were paying 8% corporate tax, but quite recently, since last year, the previous government changed our corporate rates, and then we are now paying 25%. In fact, this is affecting the rural banks greatly. Because
what does this mean?
It means that whatever profit that we make, we have to divide profit, we divide it by 4, and 25% will have to go into the government chest. And that is part of the tax we have to pay to the government. And this is actually a big problem for the rural banks, because the profit that we make, we're able to plow back not only for corporate social responsibility, we also use it to build a capital gradually. Because when we have bigger capital, that is where we'll be able to help the rural communities. So we are appealing to the government that this is a very big hit. In fact, I would describe it as an astronomical increase. It's an astronomical increase.
Stephen Safo Kantanka also tells Joy Business, though they are not in any way opposed to this astronomical increase, they will be better off if payment is staggered.
We are not against the increase in the tax, but at least it should be increased gradually. If, for instance, from 8% it could go to about 15%, we will not argue about it. But from 8% to 25%, it's going to be a big blow to most of the rural banks.
So government can stagger, is that what?
They can stagger. The government can stagger. And we are not against increase. We know things are moving up, and we are good corporate citizens. We are not asking for a tax-free zone. What we are asking for is that the tax should be increased gradually, so that if from 8 we go to 15, after some time they can also increase it. But they should also look at the help that we are giving to the community.
So on the marketplace, let's now do some stock market analysis now. And investors continue to repose confidence in the Ghana Stock Exchange as inflation dipped further down in the month of June to 12.1%. Reports indicate the benchmark GSE Composite Index has also risen by 2.3% to close at 2,086.4 points, now representing a year-to-date return of 23.5%. Now, for a more comprehensive analysis of this particular development and also for a voice on the development with the ADB Bank, Charles Aite joins in live with a discussion with Asseya Kotia. He's an investment analyst with Nordia Capital.
To interact with the Chief Operating Officer in the person of Asseya Kotia in regards to issues, pertaining to the Ghanaian economy, specifically the stock market over the past 6 months and the way forward in terms of his perspectives and his projections as well. Many thanks for your time here on Marketplace. First of all, the year has, run very fast. We've passed 6 months already, and there's been various developments in the stock market, especially, and as well the economy as well. Your review of the performance of the stock markets and the economy as a whole over the past 6 months.
Okay, the stock market has been quite impressive this year, coming from back-to-back negative returns. That's last year, last 2 years. Already we've gone past the 20% year-to-date mark, and that's not even annualized, that's a year-to-date. That is very impressive as compared to the rival money market instruments averaging 12-13%. And even that, we're talking about annualized yields. So we have a good capital market, and when your capital market is booming, it shows that your private sector, which is representative on the capital market, is also doing well. So I think we've had a good 6 months so far, and we're optimistic even of a better 6 months to come.
Speaking about the positive sides, what do you think accounted for, these advantages?
I think largely on the yields on money market instruments, taking a nosedive. Usually we have a reverse relationship. So when you have money market instruments that are supposed to be less risky, taking this kind of trend, right from the end of last year, I think November or so, you saw the yields coming down, and in the teens now. We've been in the teens for some time now, and you have investors who want to take a bit more risk by looking at the capital market. However, the capital market instruments, the listed equities, would have to make a case for themselves before you have consistent demand in there. Largely also stabilizing the electricity problem, I believe, has had a very major effect on bottom lines of most of these companies, especially the manufacturing stocks and even the banking stocks. Most of their businesses is hinged on a lot of power, a lot of electricity. So when you have that stable, it helps. Also, I think we have seen that we have had some major tax reviews. That's read in the budget state, the 2017 budget statement, and anybody who wants to invest in a company that knows that whatever tax they're going to be paying is going to be reduced, which means that you have prospects of bigger bottom lines. That is what will be beneficial to you and I as investors. We tend to demand more because it's a good avenue for us to exit some surplus funds. So this, amongst many others, I believe has helped to propel what we're seeing on the market.
Looking into the crystal ball over the next, six months, I believe we've already started the seventh month already. What should investors be looking out for?
I think the capital market will continue as started the year. By all indications, we're expecting the yields on money market instruments to come down. Inflation has come down even to 12.1. That's only on June last week. And the prime rate has consistently come down as well, 22.5. We're expecting that the next review, which will be soon, we'll see it even coming down further. And when you have these indicators taking this nosedive, you expect that the premium that is paid on money market instruments will not be as much as it was when you have them on the heightened, level. And so if this continues, which I expect it to, money market instruments, the winner in this case, I believe, will still be the capital market. So yes, we still have the stocks that are going to be driving the economy for the next 6 months. So the capital market, I believe, will end. I think a year-to-date of at least 35% on both the general index and the financial stock index will not be far-fetched.
We have started a new week, and of course, we do know that the stock markets are going to be trading this very week, as they always have. Your, assessment of how things are going to pan out, I think it's going to be, moving up in the very best of, pace this very week, or we should be expecting, what happened last week to just be replicated this week?
Okay, last week, the market responded very well to the previous week. We had volumes value increasing significantly. You had volumes increasing by about 87% and values even more than 1,000%. That's compared to the previous week, thanks to two of the banking stocks, that's Standard Chartered Bank and Ghana Commercial Bank. They drove the volumes, especially Standard Chartered Bank, which had a block trade of valued over 4.4 million cedis. Usually you expect the market to take a chill a bit after a week with so much activity. So volume value, I don't expect the kind of indicators on the numbers that we experienced last week. Nonetheless, on the price chart, we expect to have a bullish run. Last week, it was only, I think, Ecobank Ghana that recorded a price loss. That's week on week. This week as well, I expect that we have more positives than negatives. So this week, yes, we should continue with the run that we've seen so far last week. That's in terms of the price gains. I expect more price gainers than price losers. I expect Standard Chartered Bank to continue with its good performance. It's still ending with a lot of demand as against the limited supply on the market. And the result of that, obviously, is an upward price movement. I expect FanMog Limited also to do well. It's been a tremendous stock so far this year. Enterprise also has pulled through strongly for the past month or so, after we had very important information that a strategic investor had come to redirect the activities of the insurance stock as well. Also, I expect Unilever, which is also a very closely traded stock, to continue to do well, not necessarily because of too much of prospects. I mean, when you have very little stocks on float, the least demand propels price, and that's been the case for Unilever and then PZ, and so we expect that to also continue. Nonetheless, Ecobank Ghana, I believe, also would give up a little bit of value. Also, Ghana Commercial Bank, mainly because these two stocks have got more supply, much more supply than is being demanded right now in the market.
Okay, let's still stay a little further on the financial market, because we do know very well that there's going to be a new managing director managing the affairs of the ADB very soon, in the person of Dr. John Kofi Mensah, for that matter. He's going to be replacing Daniel Asiedu. What are your initial comments about this very, shift of positions by government?
Okay, Mr. Asiedu has been around fully for a few months, and so you would, when you have the top, moving in the rate at which it is doing, it might not be the very best signal for investors. But mind you, ADB is a bank that has a lot of control from government. And I mean, unfortunately, you expect that this is what really happens when you have a change of government like this. There are some significant places or very relevant seats that are changed. And so ADB, I believe, is one of those seats that have been changed, because Mr. Asiedu, I believe, from Zenith Bank to ADB have had a sterling performance. And so I don't believe it will be too much of a competence issue. I believe it will be more of an ideology and a policy thing. I believe that currently the major shareholders believe that that's Dr. Mensah, is in a better position to drive whatever policy or whatever vision they have. So we'll wait and see. But for investors, because now ADB is on the market, for investors are not too comfortable when you have the person sitting on top, changing seats as often as we are seeing. But we hope, I think, rationally, we expect Dr. Mensah, if indeed he does impress shareholders, to stay for the next few years. I would say that investors will watch critically. They kind of accepted Mr. Asiedu there's a new person on the seat. The next few weeks, that is if he does take the appointment and he comes on the seat, the next few weeks and the next signs that he will show will be critical as to whether investors would keep on looking at the stock and keep on demanding or otherwise. So a lot to rest with Dr. Mensah, a lot to rest with him. However, he's not a novice in the game. He has over 3 decades of banking experience, from Unibank to First Capital Plus, which was a savings and loans, which he was instrumental in making into a bank. So I believe that he understands that terrain. He understands moving from a savings and loan to a bank can be a rough thing, but he did it and did it successfully. So there are some positives to look out for. However, ADB is a much, much bigger bank with a more complex shareholding structure. How he's able to put ideologies from shareholders together and champion the vision and also satisfy especially the minority shareholders or the investors who bought the stock on the streets and their offices in these funds, pension funds, mutual funds, would determine whether or not the stock will do well on the market. So I believe that early days yet, let's wait for him to accept the appointment if he would, and let's see his first few steps, and let's see how it goes.
I believe it's early days yet, but can we also, project in terms of the shocks, possible shocks in the stock market in the wake of him coming over?
If the policy direction is so adverse, if it's so different from what investors saw and purchased, then it might take all of us as analysts back to the drawing board to see if we believe in a new direction. If we do believe in a new direction, we would, of course, continue to demand the stocks because we are in the business of making money as investors, and so we'll continue to demand the stock. Nonetheless, yes, potentially there could be shocks. It could go bad if what we see in the next few weeks, that's if he does take the appointment, is very different from expectations, and we don't believe.
All right, so let's still stay a little further on the appointment of Dr. Mensah as a new MD for ADB Bank, and we get to hear now from the head of research of Data Bank, Alex Wine.
The momentum will continue into the next half year. The banking sector, even though it's grappling with high NPLs ratio, but we have seen the banking stocks on the contrary, recovering quite strongly on the stock market. And we also realized that some of the consumer goods companies like Farm Milk and agribusiness like Bob and Goyle and OMC, they are all gathering momentum. And we think that the market the outlook is quite bright for the market for the remainder of the year. For me, I'm cautious about picking sectors at the moment because we have very few choices on the market. The oil marketing sector, even though the sector is quite fragmented, but the 2 listed companies are expected to do well, in particular Goyle. The banking sector recovery has just started in terms of stock market performance. So, and also we are also seeing some strong performances from Farm Milk, which is also one of the leading consumer companies or consumer goods companies in Ghana. So the performance going forward, from our point of view, will be broad-based. You have to consider the track records of the person that is coming on board. And as I mentioned earlier, Mr. Mensah is probably one of the finest bankers that we have in the country. So it will be interesting to see how he leverages his experience in the banking industry for the benefit of ADB. For the past couple of years, the bank has been embarking on aggressive branch network expansion. So these are some aspects of the business that I expect Mr. Mensah to continue.
All right, so some expert views on the appointment of Dr. Mensah as a new managing director of ADB Bank. Let's now take a brief breather here and bring you some investment tip.
Investment Tips is brought to you by Daffing Finance, Deposits, Investments, Borrowings and Advisory.
Investment constraints, the tax concerns. What is the tax implication of an investment product? This deals with the taxes of the investment returns. The implications of the taxes are: no tax implies larger net returns or proceeds. Tax-free investment periods or products are preferred to taxable investments naturally.
Investment Tips was brought to you by...
And we could get into serious power crisis from the last quarter of the year. This is due to delays in reaching an agreement for gas exports from the 10 oil fields and fears government may not have the required funds to import crude for power generation. But Dr. Amin Adam tells Joy Business consumers should be assured things are under control. Meanwhile, Dr. Adam says the ministry is doing everything possible on its part to ensure Ghanaians continue to benefit from Ghana's oil industry.
I went to the FPSO J. Ekufuor, accompanied His Excellency the President, and I was thrilled to learn that up to 56% of all the personnel on the FPSO are Ghanaians. 56%. Those days when you had less than 10%, I'm talking about the first Jubilee project, to about 56% of the over 200 people who are on the FPSO. I don't think the records do not support the fact that we have made significant progress when it comes to local content implementation and enforcement. And so, as far as I am concerned, yes, a lot has been done, but we need to do more. And this is why our president has a vision to position Ghanaians to participate more effectively than they have done in the past in the oil and gas industry. And so his manifesto promise to launch and implement the accelerated oil capacity development program is on course. It will not be long. His Excellency the President will launch this program. This will target a number of technical institutions in Ghana that will be supported with the equipment, with the laboratories, with trained teachers who are technically sound, and in partnership with other technical institutes from other parts of the world to train the Ghanaian youth in their numbers, not just to work in Ghana, because the oil and gas industry is a global industry, so that we can equally export skilled manpower for them to work in the oil industries of other countries. But this program is also to support Ghanaian SMEs so that they have not just the technical capacity, but also are able to source the necessary financial support. I'm sure you know that the Local Content Development Fund has been set up for the fund. The fund has started receiving money, and this will be used to support the President's agenda of providing research incentives, technology incentives, but also financial incentives for local Ghanaian companies that want that support to be able to work in the industry. And so, yes, we have done so much, but we need to do more. And this is why we are determined under the accelerated oil development, capacity development program to push the frontiers of capacity building in Ghana to position Ghanaians to take over the industry eventually.
And finally, before we go, the Bank of Ghana has established a Payment Systems Council to streamline activities of the Ghana Interbank Payment and Settlement Systems, GIPS, as the regulator continues to enhance interoperability among banks. Speaking at the 16th edition of the Banking Awards, the Governor of the Central Bank, Dr. Ernest Addison, called for full participation by all stakeholders.
About 33 banks competed in this year's Banking Awards under 17 categories. Finally, EcoBank came out tops as the Bank of the Year. In an address, Governor of the Bank of Ghana, Dr. Ernest Addison, reiterated the establishment of a Payment System Council to assist with interoperability among banks.
The bank has established the Payment Systems Council with the objective to drive the process for orderly development of the payment system, to increase access to financial services and engender financial and social inclusion. The Bank of Ghana is in collaboration with all stakeholders to strengthen the payments and settlement systems and promote interoperability within the financial sector and the various telco platforms. The implementation of interoperability within the payments and settlement system will provide an added boost to expand the digital financial service platform and fully integrate it with other operators and the banks. This will inure to the benefit of all stakeholders and expand the scope for more customer-friendly financial products.
As technology continues to reshape the banking sector, the central bank governor added plans were in place to promote the interest of customers with the establishment of a consumer complaints unit.
The bank has taken a number of initiatives that will help maximize the opportunities and minimize the risks that come with innovation-driven change. As technology brings financial services to a wider set of customers, the bank will ensure that customers and investors are not harmed or exploited. This will ensure that the reputation of the system remains intact. The bank has established a consumer complaint unit, which seeks to ensure that customers of licensed financial institutions have recourse to impartial and fair dispute resolution processes.
It's been a great pleasure indeed coming your way again for the past 30 minutes or so with some business stories. And the program is The Marketplace. My name is Emmanuel Abwaji. Have a good afternoon.